Hey everyone, John Henry here, Slingshot Futures Trading Group. Welcome back. Hopefully you've had a great weekend. I'm just coming back from a family trip, and now we're getting ready to jump on into the weekly futures, stocks, and Forex outlook for the week of 8/30. Actually the last day of the month tomorrow, coming into a Monday and then going into a brand new month already, September. Crazy how fast this year's been going by. It might be a good thing with how this year's been going. But anyway, jumping into the future side of things, we're starting off on the S&P, and overall the S&P has a very obvious uptrend, right? We're at all-time highs, we're breaking back up again, everything is very strong with very, very bullish momentum. Now, a couple things that we were looking at along the way here was simply just this multiple measured move that's been going on from the bottom to top, working its way up, where they're hitting it over and over and over again, but we kind of started to break away from that and get into this weird, grindy sort of squeeze move, and it appears as though we're kind of looking for potentially a larger objective. And a lot of times that larger objective comes off the backs of that secondary larger move. So if we're looking at it in that context, we could be looking for either this full leg, right, going up from there, which we're getting kind of close to, or we could be looking for a slightly more extended one like that. But the thing is, that puts it way up there, which is still possible. And then we also have, ignoring the bottom, that little blow off on the lows, which sometimes does happen. That's how you get spike in channels. If we measure just that one and we continue that forward, we can see that that one's actually lining up kind of nicely. And we might want to maybe even take that all the way up here, and that might give us kind of an intermediary longer term objective. Either way, everything is still pointing to the upside, at least for a little bit. The nearest measured move target is back into the 3550s, and then from there it just goes higher and higher. The obvious next big thing that's going on with the S&P is the fact that we are at all-time highs, and we do have that very nice spike in channel moving its way up. When it comes to a spike in channel, typically you want to see the market pull back. You've got that spike to the upside and then it channels. You want to see it break and come back to where that channeling started. We haven't had that yet. So obviously in the back of my mind, yes, we're coming into all-time highs and we're pushing pretty aggressively into them. But we still haven't had that corrective phase yet. So in the back of my mind, it's a little bit concerning because there's still some potentially big unfinished business down here. We have a lot of unfilled gaps that haven't been filled in. That's all these green lines here. There's just a lot of stuff that could really use a good pullback. Now, looking at the overall upward movement, obviously we have a spike in channel to the upside that we're looking at grinding along, and it appears as though we've got a bit of a midline kind of hovering inside of here, which is where the market is sort of at the moment. Aside from that, though, everything else is pretty straightforward. We've got a nice bull channel to the upside, looking for a continuation to the upside. We're breaking above midline support, so we could be looking for an extension higher. It's just this market is getting extremely overextended to the upside, but not so in the sense that, you know, there's big bars or anything like that. We don't have any giant bull bars up here to signal that it's the end of the trend. So it's just really persistent bulls all the way up, and that means that we're probably going to see them buying basically every dip that comes along, and that's kind of the case for all of the indexes. Moving on over to the NASDAQ next. A little bit of a different story here on the NASDAQ. Obviously, it's been at all-time highs for a while. The tech sector really wasn't phased a whole lot. There was a dip, but, well, they've kind of doubled that up since then. And that brings us to kind of the point of this. One big thing that a lot of traders, because we're dealing with all-time highs, we have to kind of concern ourselves with is just projecting. Where is the market going to go? Where do people think that the top is going to go in? And then it usually goes a little bit further. When you're at all-time highs, that's why things are so wishy-washy up here, because nobody really knows. There's no structure. There's nothing previously to work with. The market's literally never been there before. So when we're dealing with these all-time highs, all we have to work with are projections. So we could look at that and say, okay, well, you know, as a projection, we can measure this leg down and then just pop it on the upside. I measured that the wrong way around. Let's try that again. We measured from the lows and right there, and then we can park it there and look to where an upside objective is, and that puts upside targets all the way up to 13,500 if they're going to do a full-blown reversal, or at least into 13,000, and we're just coming into 12,000. Now, there are obviously a lot of things that stand in the way of that. We're at the top of a potential channel, but aside from being massively overextended, and we are seeing some proof of that overextension. Remember, on the S&P, we weren't seeing those big blow-off bars, but on the NASDAQ, we are. Caveat to that, though, is that the bears are proving nothing when it comes time for them to pull back. We have a ton of unfilled gaps below. It still seems like sellers are in the juicer, right? That's all this really comes down to, is it's just a sell squeeze that's getting out of control, and now sellers are being forced to cover, and they're being forced to cover into the highs, and that causes the short squeeze, and it blows off and just keeps going, which might very well be the catalyst for them getting up to 13,500s. For now, though, logical thing to see next would be the market go into a sideways range. We've had a big blow off, we've had a very large move to the upside, and we're also completing a lot of measured legs up here. So this is a major target area where we're going to see a lot of buyers beginning to peel off. We don't, again, know, because of the all-time highs, where that could be, but the fact that we have 12,000 lining up with the top of a channel, lining up with an overextensive blow-off move, there are a lot of types of traders, whether they're swings or scalpers or intraday or weeklies or whatever, that are looking at this kind of with the same mentality, where if it starts faltering up here, they're going to be a little bit faster to jump ship. That doesn't mean start shorting immediately, but it does mean if there are some kind of kinks in the armor, well, that might be a clue that the top, at least in the short term, is possibly in. Right now we're overextended, we're above the channel highs, definitely looking for a pullback, but so far we haven't had the signal to really believe that, and since that's the case, looking for upside targets all the way up to 13,500 potentially, which is kind of insane to even think about. And then moving over to the Dow. Now the Dow, definitely the laggard of the bunch. It's definitely not as strong as the others. We're not at all-time highs yet. It's getting close, right? It's getting close. That big round number, 30,000, is looming up there. But it's just kind of hanging back a little bit. Now, to be fair, a lot of things are really interesting for the Dow, in that if we're looking at it from a correlation type standpoint, then you would naturally expect the Dow to go to all-time highs just like all the other ones have. So it does have that kind of wind at its back, right? It's got its sails at full mast and it's ready to go. I don't know the technical terms. I probably messed that all up. But they're going forward, and all objectives point to all-time highs, at least above 29,000. Major measured moves are working higher. There's less open gaps below, which is, it creates a little bit less pressure for the market to have to slide down. It's still obvious that sellers are stuck in the move, and it's still obvious we have a spiking channel here just like all of the other markets. But the big thing here, comparative to the other indexes, is that it's got a little bit more potential as long as it can let loose. The big thing that the Dow doesn't have, that the other markets have kind of had in their, the wind in their sails, if you will, is the tech sector. And a lot of what's happening to the Dow, they're getting held down by the stocks, their underlying stocks, that make up a big percentage of them, like Boeing, which obviously is having a little bit of a difficult time. So it's being dragged on a little bit. And if that can start recovering along with everything else, then we're probably going to see the Dow at all-time highs in the not too distant future. Now heading over to gold, we've got a good continuation leg to the upside. We do still have a lot of unfilled gaps, a lot of unfinished business underneath us that might want to try to continue. But looking from a measured move perspective, we've kind of reached above that. It's broken above that. A lot of profit taking ensued, which we see on this nice little pullback. But the big thing that we're seeing here is now that the market's pulling back, look at what's happening to volume, right? Volume is significantly jumping up, which in this case, the market is pushing down and the volume is going up. Well, in that sense, then we have more buyers coming in on this pullback. Buyers are accumulating. They're showing some interest here, and if we can start breaking down some of this falling resistance and get out of some of this funk that's going on, we're probably going to see another leg to the upside just to kind of retest that 2,000 area. It's a big psychological level. We'll probably reach out and grab it, maybe poke our heads above it a little bit. But a lot of times those big psychological levels like that, they kind of come back to haunt you, and the market will hover around there for a little while. Looking a little bit closer in terms of just price action, it's pretty obvious that we're building a base here. Every time the market comes down to the lows, it's showing some really good support, and when the sellers try coming in to invalidate the buyers, right? Really strong bear trap, maybe? Strong bull bar, ooh, ooh, the bears come in, now they're trying to take them down, but the bulls take it right back up again. They're not letting the sellers set up those traps, which means that sellers are starting to get stuck. And if we start breaking higher, those sellers are going to start covering into that rally, probably back through 2000. And I would guess, if I were looking at that 2000 area, I would say that there's a pretty good bet that there's going to be a lot of stops above 2000. So if buyers can pressure through that 2000 area, get up to like 2001, 2002, 2003, 2005, you can start feeling that stop run momentum catching up, where we might find ourselves back at 2100 before you know it. It just depends on if the buyers have enough oomph to really hit those stops and get it to run. At the moment, we've filled some major objectives. It's logical to see the market want to pull back a little bit here. It's common sense. Nobody wants to buy way up at the top. But the big thing that we do have going for us is that we're coming into the lows of the channel. There's a lot of obvious volume showing that there's potential accumulation going on. Sellers are now starting to get stuck more and more and more. That's a very good sign for a potential move back towards the upside. So I do like it. We just got to see the buyers show up to the party and really back this move. All right, moving on over to the Euro USD. We've got some pretty good consolidation. If you remember, we were talking before about that open gap area that was inside of here. Well, we're still kind of hovering in that zone. Arguably, we could go maybe just a little bit further up. It would be nice to see them challenge that 1.2. It's obviously a major psychological level. Everybody's eyes are going to be drawn to 1.2. All of those zeros at the end makes it pretty appealing. So again, just like we were talking about on gold, likely if we start poking our heads above 1.2, there might be a little bit of a blow off, and that might push the market right back up towards that 1.22 area where there's a lot more resistance. Obviously, we do have some really good resistance at the 2.1 as well, so if we do find that little blow off, it might be just enough to grab up past that 1.2, blow off a little bit, and then start pulling back from there. Either way, it's pretty obvious that the market is in dire need of a pullback. The last time they pulled back, it was a very deep dip, right? It moved up, pulled way, way back, like 70-80% into the move, and then rallied all the way up to a new high. And once that new high was made, not this high, right? Not this guy. We're talking about this one, right? When they finally broke above that major swing to prove, well, they've barely pulled back 10-15%. There's hardly any pullback in here. So what that means is we're probably looking for, at some point, doesn't have to happen tomorrow, but looking for that deeper pullback to previous structure, and that puts it right around that 1.14 to 5 area to see if we can get that area to bounce back up. We are seeing a little bit of volume starting to creep back up, but for the most part, it's relatively level in an area that would make sense to see volume start leveling. This is a big zone of previous structural interest. Buyers are trying to get it to break higher. Sellers are trying to get it to fail. We haven't seen who won that fight yet. Once we see that, we'll have a lot more information. As of right now, I think it's more of a waiting game, waiting for the euro to dip a little bit further down or go a little bit further up to short. We're just hovering in the middle, and there's not a whole lot of proof of anything right now. If it does start breaking out, though, to the upside, that would have a lot of shorts who are stuck here, which could create a massive zone of interest around that 179 if it comes back to it later in time. And same thing, if it does break down, that might be an area of defense later. But right now, just don't know. Gotta wait. All right, over to the dollar yen. The dollar yen is a mess. This market is just stuck inside that giant choppy wedge range type thing that happened over here, right from the top to the bottom. It just can't get out of it. Even if you're looking at the low closes and the high closes and ignoring the wicks, it's still stuck inside. It can't get out of here. It's very, very stuck and not really doing a whole lot of anything. So if we zoom out and we get a little bit of a bigger idea of what's going on, it starts becoming a little bit more apparent that we're dealing with a downward falling resistance that the market tried to break out of and so far is failing miserably at. They tried to come back at it again, failed, tried to come back at it again, failed again. Now we're back below it with some pretty good strength. If the buyers lose their ground here around this 104, which is an obvious zone of support, if the buyers lose their ground here, we're probably going to see the market sink down to the next logical zone of interest towards around 100. Gigantic psychological level, all eyes on 100. Everybody on the planet sees dollar yen 100. Like, you know, it's very obvious. So with such a huge psychological level and with so many failings from the buyers above the top, it would be pretty hard to not see them want to challenge that 100 level. The last time they came around to that zone, they made it just above 101. Likely the next time around, we're probably going to see them try to dive that 100 point. The last time 100 was tested, it was massively supported, so that is going to be a big zone of interest for sure. But seeing these falling lower highs, lower highs, lower highs all the way down, and coming down to support and seeing the buyers fail again, they might just want to shove through that 100 with a little bit of a blow-off. So be a little careful on the dollar yen on the lows. But for right now, looking for the short side and looking to see if we can continue this breakdown and just really pressure the longs for a good break under 100. All right, now over to the pound dollar. This one is very interesting. There are a lot of people that are underwater on the pound dollar right now. We have this really vicious blow-off that just chunked the market in March all the way down with a pretty strong reversal up, kind of a V bottom-esque, but then it just stopped. And it went sideways, right? Sideways, range-bound, sideways, range-bound, not really doing much until it finally made up its mind. They tried breaking low, failed, tried breaking high, and the sellers almost took it, but then they lost it, and we started our rotation to the upside where we are now. And when we start coming back up in towards the highs of where that big dump was, that's where everybody was previously stuck from if they were long. They tried buying in, they tried getting it to go higher, it failed, they got absolutely railroaded all the way down, all through March basically, and had been sitting on it since then and had been waiting and waiting and waiting, and the market finally comes back, and as soon as it gets even close to the high closes up there, it starts going sideways. And that's not a surprise because that's where everybody is expected to get out. But what is also expected is seeing a little bit more of a pullback, which we didn't get. We had higher lows, actual kind of bear trapped lows, higher lows, and higher highs. It's continuing up, which is what a lot of people aren't expecting to see. Usually a bull move, like a bull spike in channel, is not expected to complete breaking out to the upside. It's overextended. It's not very easy to maintain market strength like that. It takes a lot of money to keep that going, or a lot of fundamentals. Either way, that's a very strong move, and if the buyers can maintain this, we could be looking at a very strong reversal, so much so that if you zoom out, you can kind of see what I'm talking about, where if we zoom way out, it's obvious that the pound dollar has been in a downtrend, but then we started bottoming out. Higher lows, starting to see that 3 higher low reversal. Breakout back to the upside, got a double top, and when they came back down, what happened? Right? Trap below the lows. If anything, this is the type of formation that we're going sideways and accumulating for a significantly longer term move. We're probably going to be range bound in here for a while, and we're getting close to the top of the intermediary range. If we start breaking above this, then we're probably going to go to that 1.4 quarter, 4.5 area. And then from there, we'll have to wait and see. If we start failing from here, though, it would be very likely and honestly beneficial for the buyers to see a deeper pullback towards that 1.2 again. Have something fundamental go off, whatever they need as an excuse to get it to go down there. But if they can get one more dive down towards the low 1.2s, that's going to be a heavily supported area that's going to be looking for some continuation to the upside. We haven't yet broken to a new swing high. That's going to be a big one above those 3.5s. The last time we were up here, there was a lot of resistance. It's the buyer's turn to really either show up or give up. And, well, we're just going to have to wait until we see that answer. But right now, the buyers do look like they're poised to try to make a run up to 3.5. Just understand it is heavily overextended, and it's going to really rely on a lot of trapped shorts to fuel the move to the upside to kind of keep that drive going. And if they can't, we're probably going to get that deeper pullback to the real big money zone around 1.2. All right, jumping over to the stock side of things. Next up, DKS, that's Delta Kilo Sandy, had really, really good earnings and jumped over that $50 mark. And whenever they have a psychological break of a level on a gap, that's a very strong indication that the market's going to want to go higher. And we're seeing that kind of further exemplified by the amount of sideways price action that's going on here. There's a lot of accumulation going on. Don't let the lack of movement in terms of body size fool you. This is a big chunk of volume that's coming in here, which shows that there is a potential accumulation for a move. We don't know if that move is going to be up or down, but usually when you have a really strong gap up on really good volume, right? A really good earnings gap to the upside on really good volume and a strong bull bar that's also supporting it, it's typically showing that institutions and larger fund money is coming into the stock looking for it to increase in value over a longer period of time. It's kind of interesting because it's very expensive right now. So this could also just be profit taking, but the fact that that closed is such a strong bull bar, there could definitely be a very long-term play here. And with as many open gaps as there are below, any dip that happens is likely just going to get bought up like it's candy. So definitely keeping an eye on DKS in this consolidation, see if you can get a little bit of a break. A false break to the downside would be very nice. A false break to fill some gaps on a big washout would be even better. Buyers are showing their hand in that they're interested. Now we just need that kind of consolidation to show us what they want to do next. Next up, we have DLTR, Delta Lima Tango Romeo, Dollar Tree. This is one that is really high up on my radar. I love how this looks right now. Beautiful wedge to the upside. But the thing that really stands out here is there are a ton of stuck shorts down there. And we know they're stuck shorts because the market went higher. And when it went higher, it gapped up way high, right? I mean, they closed down, look at where they were, right? They're closing in the low 80s, and then the next day they're closing with a gap up to like 85, then the next day they're gapping up to 87, and then it blows off and it gaps up all the way to like 97. Everybody who was long in that is going to take some profit. It would be stupid not to, right? We're coming into a major swing high. The market has put on a huge amount of momentum to the upside with a monster gap higher. You expect to see profit taking, and that's what happened. We had a nice profit taking dip, and what did they do? They filled in some of those gaps. Right? Now we have some more volume that filled in, and what are we seeing? The same thing that happened over here. We put in a big push. They have a higher low, lots of trapped lows, little trapped lows, big trap low, and then the run. Right? Well, what are we coming into right now? We have higher lows, small little traps, big flush down, looking for them to trap underneath this area down into the 90s, and then we can look for a potential rinse and repeat where we see another rally potentially all the way back up to above 110. And that's where things get very interesting. There's a lot of support down into the 90s to 88s, and that's kind of the zone that I'm interested in. But if it does want to dip a little bit further, we also have the 81 to 77 zone, which is filling in a lot more gaps, and it's back into a lot more structure. So this is definitely the meat on the bone. These are kind of the scraps, but those scraps can still give you some pretty good moves. So another thing to consider as well is they did have their earnings come out, which is this big drop lower. And as you can see from the notes there, the poor EPS figures missing expectations, but the underlying fundamentals of the company are still perfectly on track. And they're seemingly doing slightly better overall. So there are several shorts who are likely stuck trying to bail on this dip, and they might not hang around for very long, especially considering that the underlying fundamentals really aren't that bad and are actually looking pretty good, all things considered. Definitely keeping my eyes on Dollar Tree as we push into this rising wedge support with all these stuck shorts. Ooh, very, very interesting. And then last on the list, we've got kind of a twofer. It's a double play. We've got TD, which is Tango Delta, and then we have CM, Charlie Mike, for a slightly alternate approach to the same mentality. So looking at TD, we have a nice reversal off of the lows. A lot of trap shorts again, huge amounts of accumulation volume on that dip. When they started dipping below 40, that's where we saw all that volume coming in, big spikes of volume, more accumulation volume. And one thing that really stands out here is when the volume broke above those highs, we were putting in a near top. And then we broke down, but again, higher lows. It's getting gobbled up like it's candy. And we're breaking out again, and we're seeing volume do what? Well, we're seeing volume starting to break out, but breaking out above the highs and starting to challenge that previous zone. We're already above the highs. So we're already above the highs. It took less volume to get that move going, which really shows how much strength the buyers have, or the other side of the coin, how little interest sellers have. Nobody wants to short this. The volume is way less, and it's making new swing highs. So there's a lot of momentum behind this, and a lot of shorts just don't believe the move is going to pull back that much. With a huge amount of unfilled gaps underneath us, and all of the unfilled gaps above way higher. We're talking 56s into the 60s. a lot of buyers are still pushing the market and a lot of sellers just aren't interested yet, which means that we're probably going to continue drifting our way higher. But the big thing that I would like to see here on TD or CM is just a little bit of a deeper pullback back into that area of consolidation. They're trying to break above the highs. I don't like being the first one to the party. The breakout, awesome. The breakout pullback, maybe it's there, but I want other people to put their money forward for me to do the breakout pullback stuff. I want the high probability deeper dip so I can get in at a better price, so that if I'm wrong, my risk is limited, but my upside is massive. Then we can start going up into those unfilled gaps, way back up towards those 60s, but I only have to risk down into the 42s and 45s, 46s. The risk reward is phenomenal down here. Buying up here, it's just not as favorable, doesn't make as much sense. Definitely love the upside on TD, and if we're looking at CM, you can see it's a very similar play, but the difference here is that CM is coming into some of those gaps already. So if it does want to pull back, if there is going to be one of these that pulls back at least, it's probably going to be CM, because that one is just a little bit more overextended. And there is an obvious hot pocket zone of interest down in the mid 70s to low 70s. Lots of unfilled gaps in there, all clustered together around that consolidation. Yeah, definitely interesting if we can get a dip on either one of these, and buyers are going to be crawling all over it. All right, so that's going to do it for this week's Outlook, looking at the futures, Forex, and stocks. I've got plenty of stuff on the docket ahead of us. We're going into a new month, going into September. We're starting to go into one of those quarters, right? This is where things begin to get a little bit interesting. This whole year has been interesting. We'll see if these next couple weeks can bring us even more price action. Hopefully speed things up a little bit. It's been kind of slow. As always, underneath the video, make sure to like, favorite, subscribe. That way you don't miss any of the content that we put out. If you have any suggestions for video topics, feel free to drop those in the comment section. I look at every comment that comes in, and you'll usually see me reply, and that might end up being the next video. If you have any questions, feel free to shoot me an email, jhb@ssftg.com. Don't forget to swing on over to SSFTG. Link is in the comment section down there, where you can sign up for a free 3-day trial, and you can see how we put all of this stuff to use to find our trading opportunities. But that's going to do it. Hopefully you had a great weekend. Hopefully you are coming into a fantastic week and you're ready to rock and roll. For you members, we'll see you tomorrow morning. For the rest of you, we'll see you in the next video. Thanks.